Lucas, hi.
Hello.
So just to sort of inform listeners and viewers before we get going, Lucas is mixing things up this week. In actual fact, this is going to be an end-of-year wrap, and I look forward to 2024. And as part of that particular podcast, or as part of this particular podcast, we're going to be investigating the world of Lucas in a little bit more detail, and more importantly, try and discuss some of the key themes and topics that have inspired him during the course of 2023 and the conversations that he's had, as well as conversations that hopefully we're going to be having more of in 2024.
Yeah.
So first and foremost, Lucas, hi, how are you doing?
Hello, James.
For viewers and listeners who are joining this podcast again, don't worry, you are still listening to Building and Growing with Lucas. However, we're changing things up a little bit. So I'm James Horrax. I'm a partner with Yellow Jersey PR. And during the course of 2023, I was lucky enough to be a guest on Lucas's podcast. But one of the things that we were speaking about during the course of that particular discussion, and then subsequently, was that because of how many conversations Lucas has been having over the course of this year, it would be a really, really helpful thing for all of us, really, to have a wrap of what it is that we discovered and learned during the course of those conversations, and more importantly, what we might be able to expect from the startup and scale-up community, or what the startup and scale-up community should be expecting, rather, from 2024, rather. So if you are watching or listening to this, don't worry, I'm still the ugly one and Lucas is still the handsome one in all of this.
You got more hair than me.
Listen, that's not necessarily a proxy for good looks, but there we go. Lucas, let's start with a little bit of context here, because working in news, I see an awful lot of doom and gloom.
Yes.
But one of the things that I think is really, really important when we think about that stuff is how it impacts different communities, because it's not always necessarily wholly good. It's not necessarily wholly bad either. It's quite a mixed picture. So for you and the startup and scale-up community, talk to me a little bit about 2023. What sort of year was it, and what really sort of defined it for the community?
Sure. Well, first of all, James, thanks so much for taking the time to host today, and I can empathise a lot more with my guests now, sitting in this side of the seat. Look, 2023 has been an interesting year. I think at the back end of 2022, there was a lot of uncertainty. There are a lot of startups that were focused on their cash flow and their burn, and there was a lot of uncertainty in the VC landscape as to what 2023 would hold. Now that we're at the end of 2023, I think I would sum it up in three main themes. So the first one would be the pathway to profitability or failure, because I think it's one or the other. Yeah. The second one is really focused around real-time data. And that's featured quite a lot on the podcast this year. And then the third one, I would say, is just a real emphasis on quality when it comes to creating content and engaging with communities and customers. These are three things which I think have really shone out this year, both within sort of the podcast, but also in wider conversation with the community.
Yeah, well, listen, that's really interesting, and we're going to come to each of those in a little bit more detail in short order. But in the same way that you have very kindly turned the tables on your guests, yes, I'd like to do the same with you for a moment. Because I don't think that during the course of, and you're a very modest man, by the way,
Thank you.
Because you don't really speak about what you do or how you do it, but rather you ask those same questions of others. And so I'd like to ask you the same, which is, firstly, what do you do?
Yes.
I mean, obviously that's an important one. But more importantly, why do you do it, and why this particular part of the market, and what makes you so interested in it?
Yeah, sure. So look, really good question, one that I rely on every week. But I'd be delighted to answer it. What I might do is actually start sort of from the beginning, because I think my background really laid the path to where I am today. So I'm Lucas, Australian, but I really loved emerging markets. So I spent time in Cuba, Chile, Turkey, and Senegal. And I normally try and pronounce those in alphabetical order, but I failed. I came to London in 2016 and I joined British Airways. I was a director of one of their defined contribution pension funds. We had £650 million of assets under management. I was in their commercial team as well, really focused on firstly selling fares overseas after Brexit when the pound was weaker and foreign currencies were stronger, but then also on reducing the cost of distributing tickets, which might sound pretty boring, but when you think about an airline that sells as many tickets as BA, these little incremental costs add up. I then joined Revolut. I was in their growth team, focused on growing out Revolut business across the UK and Europe. Really big focus there on scalable processes and solving problems for partners as a way to distribute the product without really paying an acquisition cost. And then I joined Getir in Turkey, relocated to Istanbul, joined them when they were, pre-unicorn, and had a massive ride up. We launched across multiple different markets in Europe as well as the US, hit a decacorn valuation. My focus there was bringing on scalable systems that would help to drive that growth and efficiency, so incremental improvements along the way. And that brings me to the business that I founded called Compositus. We focus on system transformation, which it directly correlates with what I was doing at Getir. People often ask, what's an example of that? So one client had 11 different CRM systems, and we were able to migrate those into one super CRM system so that instead of doing 11 different engineering updates and operational updates each month, they could solidify that into one and gain all of the sort of reporting from one super CRM. We've also done migrations for property companies to property management systems. Effectively, system transformation is anything which will drive incremental improvements through a system. So that's one business line. Revenue growth is another one, and that ties in really well with what I did at Revolut, thinking about a multi-channel approach when you go to market, understanding that each growth avenue has a different acquisition cost and conversion rate associated with that. So just really focusing on optimizing that funnel as much as possible and bringing in systems. That's where those two business lines pair together in order to help drive those incrementals again. We also do a little bit of fundraising as well as some marketing services. So we're lucky enough to also edit 2 other podcasts as well, and that it just helps from an economies of scale perspective with all the hardware that is required to edit a podcast.
Yeah. Oh, fantastic. Well, that's really interesting, and I should imagine that given both those 2 lines of business that you were just describing a moment ago, systems transformation and revenue growth, I should imagine that actually that plays very neatly into the theme that you mentioned initially that really stuck out or struck you as being a key one for 2023, this push to profitability. Because it doesn't take a rocket scientist, and believe me, speaking as a PR person, I'm not a rocket scientist, but if you're simultaneously keeping costs under control and at the same time enhancing revenue generation, theoretically you're driving profit, right?
Yes.
So talk to me a little bit about this push to profitability that you were speaking about in the initial instance. What do you mean by that? Because as a PR person, I hear a euphemism for, get rid of as many people as is humanly possible. What do you mean when you hear when you say push to profitability?
Yeah, look, really good question, and I'm going to echo some of my guests' response from throughout the year. So for me, push to profitability is all about, in the startup world, the changing expectations of the investors. So let's say early to mid 2022, investors were encouraging startups to grow sometimes grow at all costs. There wasn't really a focus on acquisition costs, which meant that even if a startup had, acquired a ton of customers, but they had increased their burn or the rate at which they spend money, they still might be rewarded by investors with follow-on investments. Now, in 2023, what we've seen firstly are investors, let's say, asking for pathways towards profitability from their portfolio companies. What we mean by that is, that there are unit economics which companies get measured on. And I'm going to, just give a very basic overview. Let's say the cost at which you acquire a customer relative to the lifetime value of that customer. So if you're, let's say, a podcasting business and your customers pay you £400 a month, and on average they stay with you for 1 year, over the course of that year, you'll earn £4,800. Now, the important thing is to ensure that the cost of acquiring that customer is lower than, the $4,800 that they're going to pay you. And the most important thing, I suppose, for the investors these days is that they're able to see that not only the cost of acquiring that customer as well as the cost of serving that customer still leaves behind some residual, let's say, profit at the end of the day for them or for the business. So by pathway to profitability, what I mean is that businesses are able to demonstrate to investors how they are improving their business models in order to become profitable, which has been, I think, the key to unlocking follow-on rounds during 2023.
Interesting. No, that's really, really helpful, because one concern around this push to profitability that certainly I think that quite a lot of people who are observers of or work in the startup and scale-up community, what they become quite concerned about is that it often comes almost that there is additional emphasis that's placed on cost control, not necessarily revenue growth.
Yes.
And as a result of that, there's always that danger, isn't there, of potentially effectively cutting longer term capacity in the business to grow by focusing so heavily on cost. Is that a fair assessment?
So yeah, I think when it comes to redundancies, which I think maybe you're sort of working towards with that question, at the end of the day, businesses are going concerns. So a business's focus should always be for the business to keep growing. And I think startups in a way have had a sort of a bad run over the past few years when it comes to cost cutting, but actually there's been cost cutting and redundancies across all different types of businesses and sectors. Startups might just be faster at doing it and do it in a much more data-driven way, so they can say, yeah, actually we are cutting 30% of our staff, whereas a corporate, in the huge, let's say, legacy businesses that they may not be able to actually estimate and state what headcount they're dropping. I think from my side, ultimately, if you think back to a very basic business, let's say a bakery, and for each person you employ in the bakery, you need to sell 100 loaves of bread. If you have 5 people in the bakery and you can sell 500 loaves of bread, then that's great. But if there's a downturn and all of a sudden you're only selling 300 loaves of bread and you have to let 2 people go, a bakery would never make the news saying, hey, you've let go 40% of your staff.
Right.
And so I think it's really hard when, these redundancies are being made. But ultimately, if it's what is required in order for a business to be profitable, then it's going to happen in a market where revenues aren't growing.
Yeah.
The only thing you can therefore cut is cost. And, when you're cutting that cost, if there is a system that can do something more effectively and more efficiently than a human, unfortunately, the human, will get cut.
Yeah.
And I say that unfortunately, I mean, even, let's say for my business, there will come a point in time where it's possible to edit podcasts through AI more effectively than having a human do it. And so at that point in time, my business will have to then, decide, do we use AI? Can we make a margin on it? Or actually, is that business line just gone? And so I think it might be a bit of a black and white view, but that's kind of my view on cost cutting.
No, and it makes a great deal of sense. And look, listen, I think the other element in the equation obviously is revenue growth and trying to grow what you are selling. Now, obviously, that's easier said than done, particularly given how challenging the current economic circumstances are for a lot of people.
Yeah.
People just aren't spending as much as they once were, and they're thinking much more carefully about the choices they're making in procuring anything.
Yes.
Right up and down the line, including loaves of bread.
Yeah.
But from that side of things, what can businesses be doing in terms of, potentially optimizing revenue growth in the current conditions? Are there things that they can be doing or perhaps should be doing that perhaps they might not have given thought to?
Yeah, really good question. So I'm going to answer this one in a couple of different ways. I think the first one, and this is an answer that I really believe in, is that businesses really need to be cognizant of what problems they're able to solve for their customers. If something doesn't solve multiple pain points and deliver, let's say 3x value of whatever a customer is paying, then, there's no economic reason for a buyer to purchase that. And I'll give a simple example for that. A podcast editing software can reduce your podcast edit time from 3 hours down to, say, 1 hour. And, if the cost of that is low enough, then every podcast editor should buy it. And so that's, it's very, very important for value to be able to be, let's say, displayed and conveyed effectively. And the best way to do that is if you're solving a problem. And if you are solving a problem, chances are you're not going to have to pay a high acquisition cost for a customer.
Yeah.
Because if you're solving a problem, then that solution will spread virally. There'll be a viral factor to your marketing. And so you have a lot more sort of product-led growth of people coming and using the product, and then, it will land and expand automatically without, teams having to invest tons of effort in it. So that's the first section of the answer. I think the second part is just about how businesses decide to generate that revenue and how they price and sell. Okay. So there is one client that I've been working with, and they're undergoing something at the moment where they're looking at how to break down the cost of their services on a unit basis in order to better align that revenue with staffing costs to ensure that each segment of the business is profitable. Yeah. And what you're finding is that, let's say there are 5 different services, if you're able to understand exactly what each one costs you is, and ensure that your servicing costs, align with that model, all of a sudden when you're upselling, you're making sure that you're not upselling and then incurring a higher cost below it. So I'll give an example there. If an accounting firm does bookkeeping and then annual accounts, and all of a sudden they want to do a quarterly VAT return for a business, but the man hours or labour required for that VAT return is higher than the incremental cost for that VAT return, they're going to be increasing their revenue, but they're going to be hurting their profitability.
Right.
And so I think it's really important that those costs align with the revenue, and that the revenue should be, higher than whatever that cost is going to be. It sounds simple, however, a lot of businesses just say, all right, here's the bundle and that's that. Whereas breaking down those revenue items and aligning them with the cost items is a really good way to, upsell across the different services, but also upsell in a way that doesn't hurt your bottom line.
Okay, so knowing your value proposition, most importantly, in terms of growing that revenue, making sure that you are solving a problem.
Yes.
And simultaneously, at the same time, ensuring that where it is maintaining profit margin and where it is possible to do so, upselling across different lines of business in order to take advantage of existing customers. Would that be a fair assessment?
Yeah, that's right. I mean, it's easier to sell more to an existing customer than to acquire a new one. And so then the challenge for the business is that when you're upselling to a customer, that you're making sure that actually, your bottom line is benefiting. So I'll give it an example from a hotel. If you think about the most basic cost a hotel is the most basic revenue item for a hotel, it's room only. And then you get, let's say, room with breakfast. So the cost of serving that breakfast should be lower than the incremental revenue gained from selling it. And then, you might have some customers that, use the spa. So again, like what revenue is going to be generated from the spa versus what cost does it cost the hotel to provide those services? So it's all kind of you just need to have a calculator at the end of the day and make sure that incrementally, no matter what you do, you're not getting hurt when it comes to that bottom margin as you're trying to grow revenue.
Well, that's interesting, because that point there about making sure you've got a calculator, and more importantly, making sure that sort of incremental cost to accrue revenue isn't being outstripped or outrun by the cost to provide that service. That brings us actually to one of your other points around 2023. This need for real-time data. Why has that become so important in 23? Why do you think that businesses have become fixated on this idea of more granular detail and more insight into the way their business works? Why is that? Why that, and why now?
Yeah, really good question. So I think there's a couple of things which are driving it. So the first one is an expectation amongst businesses and even consumers that things will happen in real time, and that is being served or facilitated by all of the developments in cloud infrastructure and cloud architecture. I'm not sure whether the InsurTech panel podcast will come out before this one or not. And if this one's out first, then it's a great preempt. But I was speaking with some colleagues, Mark from Superscript, Nyasha from Floodflash, and Will from Flock, who are three leading InsurTechs. And one of the points that we discussed was the fact that if the pandemic had have happened sort of 10 years earlier, the cloud infrastructure wouldn't have been there to host all of the meetings that we had online the way that we did. So one of the big benefits of the pandemic has been that, a lot of things have moved to cloud, and therefore, if we think about any aspect of a business, we can influence it in real time. There was a podcast I did with Sarah from Smartly, and she spoke about the fact that large organizations, particularly business-to-consumer organizations, now have real-time tests being run for their marketing campaigns, and they're able to bring in real-time variables such as weather, for example, and change their marketing accordingly. You think about super apps, let's use Getir as an example, who might be able to send out, a notification about ice creams when weather, particularly in Turkey, rises over a certain temperature. Even in the UK, on the rare odd summer day where the sun comes out and decides
there are a couple of decent
stay.
days in September.
There are indeed. That's a perfect example of when real-time data can be used in order to increase incremental revenue. I'll jump back to the insurtech panel for a moment here, because I guess I've done podcasts with each of those companies, and so this information is there for listeners. But when we think about it, Flood Flash is a company which uses real-time flood data and sensors which activate once water reaches a particular level to pay out parametric insurance claims within hours instead of sort of weeks or months. And so why 2023 for real-time data? I think it could never have come too soon. I think in the past, just using this Flood Flash example, many businesses may have gone out of business because they didn't have the working capital to keep paying their suppliers and employees because of catastrophe damage and flood damage that had happened. They have no more revenue, so they shut up shop. Flock, another example there, using telematics data from car engines in order to demonstrate sort of how people or fleets have been driving, and using that to reward good driving with lower insurance premiums. I think the more data that becomes available, the more that businesses and consumers should be rewarded for kind of good behavior, let's say. And so it's coming now to let's say the Western world. I know for a few years in China it's been available. There was at one time people were able to get different credit scores based upon their level of battery on their phone. That was an influencing factor. So I think that we're just going to continue to see real-time data influence our lives in ways that we may or may not be cognizant of.
Yeah. See, and perhaps at some point we'll have to come back to a proper discussion on data. Because the China example is interesting, although it does lead to some quite interesting and not necessarily positive social problems as well. So we'll have to come. We'll put a pin in that one for a moment.
Indeed.
But it's interesting that the data, because obviously, and I'm leaning in on a little bit of some of my experience in market research here when I say this. Data has been around for businesses to use, for a number of years.
Yeah.
This idea of having it in real time, it seems to have caught the moment in startup and scale-up communities. Is it possible that another perhaps consideration around using real-time data in order to help drive some of these business decisions that are being made, is it also a bit of a proof point to perhaps funders or VCs or anybody who's perhaps looking at backing these companies to be able to say, hey, look, listen, I know what I'm doing, and by the way, if you don't believe me, don't trust me, trust the data. Is there a part of that as well, or is it, or is that just perhaps not a step too far for the time being?
No, look, I think it's a really good point. I think collecting data points and understanding what particular data points demonstrate intent is a really, good topic for startups to focus on, because ultimately that can lead to more traction, which can translate to more investment and follow-on rounds. So what I mean by that is, let's say somebody goes into the application, and let's say they're going to book a flight ticket. The startup may have seen that if somebody searches for a flight within, I don't know, let's say 21 days, they're more likely to book that flight than somebody who's searching 60 days out. So then, all right, how do they then treat a 21-day search, 21 days before departure, differently to a 60-day before departure search? The person who searches within 21 days and then doesn't proceed to make the transaction might receive a push notification within 15 minutes or 2 hours afterwards in order to bring them back. That push notification could have a discount in it. The person who does a 60-day search might receive an email 2 days later. And if we have two applications who both have the same customers doing that, the one who's most effectively able to leverage that real-time data to communicate and engage with customers will end up with better incremental revenue, which will then help them down the line with the VCs.
Okay, no, that's really, really interesting. And this is actually going to come on to, and you'll note, by the way, I'm segueing neatly between these points here. But I think it's really, really important because there's statistics, damn lies, and then there's statistics.
Yes.
Right? And actually, that particular saying comes from this idea of, sometimes if you can measure something, that there's a sort of a belief that inherently it's a good thing. Obviously, you can't sort of succeed if you don't measure something. Yes. But at the same time, there is this sort of emphasis on quantitative data and getting out there and having those numbers to hand. But interestingly, in your third point that you made around trends that you'd spotted in 2023, you said quality over quantity.
Yes.
So I'm a quali at heart. I love interviewing people. I love talking to people.
Yeah.
In case it wasn't already obvious. Again, why now? Because I've always assumed that quality is fundamentally important as a differentiator in terms of anything you do.
Yeah.
But why is it so important now in 23?
Yeah, good question. So I guess let me start with a caveat. I think, there is always a time and a place for A/B tests. And, I think, statistical significance is always very, very important, but there's not always that many brands that can, that have enough data in order to do that. I think, B2C brands, they do when they have huge customer bases. But, for a lot of startups, just running A/B tests in the funnel, I think is super important, particularly in lower down the funnel. When it comes to higher up the funnel, this is where I really think that there needs to be more quality over quantity. And what do I mean by that? On LinkedIn and in my inbox or our inboxes, there has been, let's say, a saturation in the market of people who are offering cold leads, offering outbound emails and personalization, often which is driven by AI or chat GPT. And the first thing to kind of think about, or the bell that should be ringing in people's minds, is that if I'm being offered the same product by 10 different vendors who are all approaching me cold, all of a sudden, like, this product actually isn't exclusive anymore. It's not defensible. And that's where I've seen some startups really rely on just mass cold outreach, which, 5 years ago worked really well, I think. 4 to 5 years ago, we used it a lot at Revolut, and there were some really, really good results. Nowadays, I think people feel like they're in control when they're doing cold outreach and mass emails because they can see statistics. However, I think that building a community around the problems that you solve and creating more of a pull approach to customers is a much better way to go when it comes to building sort of quality relationships with leads and with customers. So I'll pause there just for you to respond to it, but I'm happy to keep diving into that.
Yeah, no, and look, listen, that's exactly what I want to do, because I think that, and listen, there's a trite cliche of, new business is everybody's business, right? But I think that sometimes we don't really put very much flesh on those bones, and that quality component is so critical. I mean, when you're confronted with those sort of, I think we've all had them, the sort of the multi-person emails or LinkedIn mail shots that, have you ever considered having your waste disposal used by us or done by us rather? When you see that, as somebody who works in a combination of systems transformations as well as revenue growth, what's the immediate feeling that you get? Because I always, I just delete them out of habit now. But what's the thinking behind continuing down that path? Because there must be a reason why people are still opting for quantity as opposed to quality. So what might be the thinking?
So I think that people do it because it's easy. So that
you think it's
quite
just
simply,
that simple?
It's I think people do it because it's easy. I'm not saying that there are no results from it at all. However, I think that you can get better results from creating, quality content, and building that sort of pull approach. So I'll give a couple of examples. Let's say cybersecurity, some companies cold email you and they offer you, a penetration test for your organization. I'm much more likely to buy from a cybersecurity company that actually produces a bit of content that lands with me, which talks about, a comprehensive guide to what penetration testing is and why it's important for your business. If you think about another company which has a real pull approach, it's Stephen Bartlett's podcast. Diary of the CEO, they push out snippets, and people are attracted to it. It pulls people there. A really interesting company, which I've learnt a lot about sort of HR and compliance from, is Deal. Now they're an interesting one because they have also done a very sort of aggressive outreach approach on emails, on LinkedIn as well, but they create really interesting quality content for not just sort of HR professionals, but business owners in general that talk about some complex topics like, corporate residency and permanent establishment and whatnot. And I'll round off with, I've got quite a few clients that I'm really lucky to work with who, really value quality over quantity.
Yes.
And they organize events such as round tables or breakfasts where they're actually able to really sit down and build relationships with some of their sort of ideal customer personas and stakeholders and partners, which it seems to be a far cry from what a lot of businesses do these days. So I'm a massive fan of quality over quantity, and I think that I also demonstrate that. I put the money where my mouth is, when it comes to doing the podcast as well. I don't think.
I mean, you can't get it right all the time, as I'm testament to.
Oh no! Look, you were a great guest, and actually, it comes down to one of the points you made. It's important to keep reinforcing points, and you mentioned in your podcast that you've got to have 14 touch points in order for a message to resonate. And this is a question for you actually about that.
That's not how this one works.
But would you rather 14 touch points as a cold email, or 14 touch points reinforcing a message in more natural organic content?
No, it's a really, really good point. And obviously in some of the questions around quality versus quantity, there is a degree of tongue-in-cheekness about the way that I'm asking that question, because you're absolutely right. You do need a holistic approach to this. Whereas, for example, you might get a conversation going with somebody as a direct result of a cold email or a LinkedIn approach. It doesn't necessarily guarantee that it's going to yield into a sale or a new piece of business or potential revenue opportunity. And that's where, to your point about being highly selective in the first place about, well, what's the ideal type of person that's going to buy my solution, buy my product, buy my idea, what's that person look like? Going out and finding specific examples of that person.
Yes.
And then speaking to them individually. I mean, it's quite funny, actually, the number of occasions where you'll find typos across the quantity sort of volume stuff is quite incredible. Because you think to yourself, this is easy, right? But clearly it's not that easy because people are getting it wrong even then.
That's right.
But no, you're absolutely right. I mean, that sort of holistic approach is far better. And if you're seeing it in, sort of in person, in the flesh, if you're seeing it in your LinkedIn inbox, if you're seeing it because you're on a website and you get an advert come up or whatever it happens to be, absolutely, it's a constant reinforcing of that message, which is really, really important to bear in mind.
If I could add one more point there, because I referred back to the fact that, at Revolut, we did a lot of cold activity, and this is going back sort of four or 5 years ago. I think just our expectations as consumers as well have changed. Back then, 5 years ago, things weren't necessarily always video first. Like Instagram, there were probably a lot more still photos now, whereas back then, compared to now we're seeing reels, we're seeing memes, there's a lot more of a pull approach, on those platforms. And we're used to now just clicking and redirecting to things that pique our interest. Right. I don't have any sort of statistics behind this, but I think that actually may also have influenced. We don't respond to things that we're not interested in anymore. Yeah. There has to be a pull.
Yeah, it's interesting because and again, there's a whole other podcast around the sort of the social component of this, which in some ways actually is quite sad. Yeah. Because obviously, if you're only ever responding to stimulus that you are interested in, your frame of reference it becomes incredibly limited.
Yes.
So you're no longer necessarily accepting the idea that perhaps I do need somebody to empty my bin, or perhaps I do need somebody to do this for me, or perhaps I do need a different service or a different idea around what I'm trying to achieve as an individual or as an organization or as a company.
Yeah.
And so I think that there is a sort of a degree of sadness there to it as well.
Indeed.
Different topic, different time. Before we get on to your predictions or considerations for 2024, are there any other things that you wanted to perhaps sort of mention that that sort of struck you during the course of your conversations in 23?
Yeah, look, I mean, I think where to start is the right response there. I suppose I'm not going to be able to cover absolutely everything that was discussed.
Nor should you, because listeners and viewers, you should go back and watch the entire back catalogue
of
23 in order to know what you're talking about.
That's it. Watch it from the beginning. I think one thing which has popped up quite recently, again in that insurtech panel podcast, was the fact that there are some VCs that are consolidating.
Yes,
and so we're
talk to me a little bit about that. What I mean, obviously there's a macroeconomic necessity there.
Yeah,
but what does that in real terms mean for the startup and scale up world? Because I would have thought that fewer VCs might necessarily mean fewer opportunities for potential, sort of capital raising activities, right? I mean, and as a result of that, a more homogenous kind of view of, well, these are the types of firms that we are going to invest in and the types of businesses we can see growth in. Is that a fair assessment?
Yeah, I think it is. And, it ties in, I'm going to tie it back to interest rates. So we had Harjas from Shares, which is a social investment app, on the podcast a few months ago. And he was talking about how when there were low interest rates, there was a lot of money going around. People were prepared to make more speculative, let's say, investments.
Yes.
Now interest rates are higher, and it means that there's less, let's say, appetite for speculative or risky investments. And VC is, on the riskiest scale of the investment spectrum.
Yes.
people might be happy to put their money in the bank and earn 5 to 7% instead of taking a risk on high growth companies, particularly in an environment where high growth companies might get 1 or 2 funding rounds, but follow-on funding isn't as easy as before.
Yeah.
I was reading actually in the Financial Times the other day about VC funds setting up continuance funds, I believe they're called, where some limited partners are able to exit and other investors are able to buy in, and it just gives the fund a little bit of a longer lifespan. It's something which has been out in the private equity world for a while.
Yeah, secondary markets.
Yeah, that's it. VC have, I guess, focused on these ideas more, and these startups that have a bit of traction, and they're funding them to see who will go big. PE or PE firms, as Ahmet Ereljan spoke to us about earlier this year, have been much more focused on, let's say there's a family business which has been running for a while, and as part of the succession plan, the founder wants to sell some shares, and so they sell to a PE fund. Management team might stay, or the PE fund might buy the company and then amalgamate it later on into a bigger company to make the most of economies of scale. So will VC continue the way that it has been? Not sure. Will private equity firms? Yes, I think so, because in a market like now, cash-heavy companies are able to buy struggling companies at a discount.
And actually, it's, and this is, again, subject of potentially a different podcast at a different time, but, one of the bigger concerns there, obviously, is that, with the emphasis being now on this idea of, well, we've got to grow the economic pie.
Yeah.
Well, guess where the growth comes from? It normally comes from these early stage companies who are innovating, who are driving real change in their sectors. But obviously, if the money starts to dry up or it's not as readily available, how are you driving that growth? And that's going to be something that I think that we're going to have to keep a close eye on over the course of the next year or so.
Yeah.
Obviously, there have been some noises that interest rates may fall over the course of the next few quarters. I'm not sure where to. I mean, they've only just got to where they are, but so the likelihood of them coming right the way back down is very, very small. But
I mean,
my guess is that it's only going to come down a couple of sort of quarters of a percentage point here or there. I can't imagine it's going too far.
I think, we'll just have to see. I think, history repeats itself, and so interest rates are always going to go up and down. I remember, just after the sort of the financial crisis, somebody was saying interest rates will never rise again, and it's like, all right, you say that, but they will. They'll rise and they'll fall. We'll see what happens, but ultimately, if interest rates are 4%, 3%, 2%, 7%, 8%, it's a factor that you can then work with certainty, or with relative certainty, particularly in the UK. We're not talking about a market that makes 500 basis point decisions on a month-by-month basis like other countries do. And so, it might not be something that you can control. However, you can predict it easily enough relative to other variables within the business.
Absolutely. And actually, on things that we can't predict.
Yeah.
Let's talk about your predictions for 2024.
Yeah.
We've spoken at the very beginning of the podcast about what the year of 2023 was for startup and scale ups. What are your expectations for 24?
Yeah, good question. So I'm going to start with AI because it's something that I didn't mention when we spoke about sort of the quantity aspect about marketing. When we rewind to the beginning of 2023, ChatGPT was, going through the roof. And what we saw was heaps of people making posts on LinkedIn and writing their emails and getting ChatGPT to do all the work for them. And that was, a use case of AI, but was it like the best use case of AI? not sure. I think we're going to start seeing more sophisticated use cases of AI come out in 2024. That could lead to huge changes in the way that we work or we operate. That is going to, I think, be rewarded with investment rather than AI tools which came out this year, which help people with say copywriting and marketing animation. I was reading today that Google's DeepMind, I think, has discovered multiple different variations of crystals, and if that can then have an effect on, like the materials that we create and construction and whatnot, that's, will have a massive impact compared to AI generated content and animation. So that's my first prediction. We're going to keep seeing some real big hitting changes for AI, which will actually make an impact to our lives in ways that we couldn't imagine. Second one, I think we're going to see a big return to bootstrapping.
Okay.
So I think that it's going at the moment, like pre-seed and seed are still getting a fair bit of funding. So just for the audience, pre-seed ideas or startups that might not necessarily have much financial traction or much of a product. The VCs are betting on the individuals and their ideas, and seed, they have a bit of financial traction. However, I think that the knock-on effect of VCs deploying less is going to affect those two areas as well,
right.
Which will mean that if people have ideas, they've got to self-fund or they have to actually bootstrap in order to keep getting them off the ground.
Right. Okay. So for those guys who are in the foothills of their entrepreneurial journey, you're sort of effectively predicting hard times ahead in terms of getting that money through the door. If not, if you're doing it yourself or otherwise.
Yeah. I think there's still going to be money that goes to those segments. There just won't be as much as before, and it's just simply because of a sort of trickle down effect.
Right. Interesting. Okay. So AI, bootstrapping or the return of.
Yes.
Anything else that we should be thinking about in 24?
Not really that comes to mind.
No.
I mean, I think those are the key ones. I think that like we're not out of the waters in terms of the difficult economic times. I think that cost of living crisis kind of became cost of living difficulty, business as normal,
right.
Business as usual. So I think that firms and consumers are still cost cutting and just being conscious about what they spend, and so the businesses that let's say win or have success during 2024 are going to be the ones that can continue to demonstrate what value they're generating for their customers, and find more ways of delivering value to those customers in order to retain them.
Yeah, and actually I suppose that one of the other sort of features of any economic distress or, the word crisis over and over again, is that actually businesses that tend to start in those environments have historically, and it doesn't necessarily mean so that, history is not a guarantee of the future and all that sort of stuff, but they do tend to have a little bit more resilience to them, don't they?
Yeah, that's it.
And I'm thinking particularly after or during the course of the dot-com boom as well, or the dot-com crash rather, immediately after the dot-com crash, as well as immediately after the financial crisis, there were a spate of businesses that came through in those two moments of peak economic distress, that subsequently turned into world leaders, didn't they? I mean, if you think about Amazon in the dot-com boom, and sort of latterly Facebook as it was then, and Meta and Twitter, and other sort of businesses along those lines. So, what is it about sort of difficult environments and sort of startups and scale-ups that sort of can lead to those sorts of more resilient business models, do you think? What is it about that?
I think, when a business is born during a difficult economic environment, if it means that they have to be able to demonstrate the value that they're providing to their customers in order to get any traction. And so often, as a way of survival, they have to be lean. And so when, you think about those companies that you mentioned, like Amazon, Meta, they, even though at the moment they're very large organizations, they're both still very, very data-led, very, very, I suppose, lean in terms of the way that they operate, and they've been able to, have some massive margins as a result of their business models, particularly around monetizing their data.
Yeah.
But even if you took out those aspects of the business, they were just built lean, and they tried not to add fat as they grew. And so I suppose what I'm trying to say is that if people start a business during a recession, they might be starting it because they lost their job. Therefore, they have their redundancy package as their financial lifeline. And so they're going to be making sure that they spend wisely.
Yes.
Or they're starting the business knowing that it's a tough environment. And so they're just going to be cautious about what they drop money on. And that's kind of the best way to go. In my eyes, I'm not a fan of digital marketing because I see that as like a firework. So why would you invest in a firework that explodes once when you could paint your car with your company on the car, for example, and drive it around, and it's there for everyone to see every single day. So in my eyes, businesses that start during recessions focus much more on planting seeds that can grow and compound in the long run.
Yeah. Well, there you have it, guys. If you want to do marketing, don't buy fireworks. Stick it on the side of a car instead.
Indeed.
Of course, that's only if you're allowed to have a car. We won't get into this.
And only if you're allowed to buy fireworks as well.
Absolutely.
I'm sure they're banned in some markets
exactly
we broadcast to.
So let's just end off on a sort of a high for a moment.
Yeah.
Obviously, fantastic guest during the course of 2023.
Thank you. Yeah.
Really,
Thanks
really
for being
fantastic. Listen, I'm one of many. As is so much the way of my life. But talk to us about 2024. What sort of have you got any sort of resolutions that you're planning on sticking to in terms of your professional life, in terms of your personal life? Is there a little bit of give us a little bit of a behind the scenes tour of what life is like as Lucas for a moment?
Yeah, look, great question. So I'll start with the podcast, actually.
Yeah.
Before we start, I just want to say a massive thank you to Cheval, who's edited all of the podcasts and has created some fantastic snippets, which the community has been able to see, as well as Dan from Jukebox Studios and Moses, who are the magic behind the studio each week. So we wouldn't have a podcast or be here today doing a summary of the podcast without Cheval, Dan and Moses. So a massive thank you to the three of them.
Absolutely. Thank you very much indeed. And obviously we look forward to them working with you over the course of 24 as well. So
Indeed.
And we'll crack into the podcast now.
So when I first launched the podcast, I was in the midst of relocating back to London from Istanbul, and the rationale behind it was sort of two or threefold. First was I had so many interesting conversations with people, and I wanted to find a way to broadcast them. So that was that. The second one was to support the community because the war in Ukraine had just started, and we could sort of foresee that a bit of a recession or tough economic times was going to come. I wanted to be able to share some of those conversations, which would be about, how to cope during a difficult time.
Yes.
Now when I look back at the podcast, it's been very, very rewarding. I've met some fantastic people, again, yourself included, and I'm very, very grateful for that. And it's a great way for people to tell their stories, but something that I want to do more is actually educate. And so I'm working on a new content style or format, which like actually agreed terms with the person who's going to be focused on that today. So
a little
very
exclusive
exciting.
there for podcast
Yeah.
listeners. Okay.
That's it. So that's very exciting. It's something that I've been like literally drawing up for 6 months or so. And so I'm very excited that that's going to come out. So one goal for me will be to educate more during 2024. Just so that people can take some of that valuable content and, make decisions or take actions with it without having to spend any money. I believe in giving to the community. I spoke about that a lot today. And, again, just want to make sure I put my money where my mouth is. So that's that. I think in terms of, business, like 2024, really important to, again, stay lean. I know that, I've been looking at costs and, making sure that there is a return on investment for every single cost that's on the balance sheet. We'll fill the top of the funnel with different ways, different forms of content, and just getting out there. That's my focus for 2024.
All right. Okay. So getting out there, being lean.
Yes.
So you're going to the gym, is that right?
Yeah. Going to the gym. 130 grams of protein a day is the goal at the moment. So
that's a lot of protein.
Yeah.
Well, listen, Lucas, thank you so much for allowing me to sit in your chair. For a while.
Thank you.
Very much appreciated. Obviously, it would be remiss of me to not to mention, or rather to mention to anybody who's listening, that Lucas will be back in this chair after Christmas.
Yes.
And to that end, you can look forward to programming resuming as normal. But Lucas, thank you very much.
No problem.
And you've been listening to the Building and Growing podcast.
Excellent.